Hello. The company being analyzed today is Nanta Tech Limited. This is a 262 crore market cap company engaged in audiovisual products and robotics, actual robotics. Current price to earnings ratio of the stock is around 32 times. The company has seen robust financial growth from 26.59 crores in fiscal year 24 to 70.1 crores in fiscal year 26, more than double. Okay. EBITDA and profits have shown similar, really good growth. EBITDA from 3.8 crores fiscal year 24 to 11.49 crores, and profit after tax reaching a high of 8.17 crores in fiscal year 26. 11.7% is the net profit margin. Now, return equity, return capital employed, 25%, 24% return equity, return capital employed is strong, but it has seen a pretty sharp decline. And they gave the reason in this line. Basically, they had their IPO in December 25. It was listed on December 25, and IPO, I believe they got the IPO funds and their equity base, the denominator in these, it expanded quite a lot, and therefore return equity, return capital employed showed this dip. Now, company overview. What does the company actually do? This is a pretty nice image. Two businesses, two segments. One, we have the bigger one, audio visual segment. Then we have the smaller one, robotics and air solution segment. Robotics and air solutions, let's cover it first. First part of it, it's two parts, robotics and air solutions. Service robots. Okay. They got a fleet of service robots. Source and customize. They're actually sourcing the robots from leading vendors, so third party manufacturing, and customizing it via in house software. So their own software is being used. Then testing and branding. Okay, own brand, Nantatex brand, and of course, they will test it for the users and all. Service robot. This is the service robot portfolio. You can see cleaning robots, dining and delivery, greeting robots, warehousing, logistic robots, and marketing robots. So different. You can see, this one can be used for marketing. You got service robots, even a humanoid, and yeah, different uses. Then under the robotics and AI solutions comes the second part. The second part of this software development and AI solutions. This is more generic, sounds more generic. Many companies have software development and AI solutions. So what exactly is it? Three parts in this software and AI solutions. Robotics software. So robotics software, ROS based. What are we talking about? Advanced modeling using tools like Gazebo and Arvis, advanced motion planning and computer vision implementation, seamless linking of sensors, actuators, and controllers. So, software related to the robots. I don't know much of the technical side of this, but this is important. Okay, this is a very profitable segment for the company. This robotics software and AI solutions in general is very profitable for the company. So remember that. Then we got AI and automation solutions, pretty generic. Custom AI models, we got computer vision, NLP, and predictive analytics development, generative AI tools, okay, intelligent chatbots, automated content generation. This can be used for the robotic software. Then we got AI and automation solutions, mobile app development, portal development, website, and SEO. Mm, they're pretty generic statements. So these were the two parts. Okay. Now, this is the bigger revenue one, audio visual solutions. Okay. You see all these products, interactive displays, active LEDs, microphones, AI based PTZ camera. I don't know what that means. These products, Nanta does not manufacture the products, but they are integrating them. Basically, let's say a client wants for their office or some other place, I don't know, some place. It's a B2B one, you can see, uh, B2B project execution. A client wants audio products and visual products for something, maybe some conference room, whatever. They will come to Nanta Tech and Nanta Tech will source ones. Okay, first of all, they will design and they will see what the client wants, in what quantity, what type they want, what are their needs, and then they will procure the particular equipment. They will design the entire space, what to have where, and they will act as an integrator. Okay, so you can see end to end audio visual integration, supplying, installation, testing, and commissioning. consulting and designing space planning with optimized acoustics, lighting, and system architecture, space planning. Yes, space planning and custom solutions, custom audio visual solutions for the clients. So this is the big revenue bringer. Then company snapshot. In here, I want to show this. 400 robots were sold in fiscal year 2026, 17 plus robotic models across use cases. So this is, they're actually selling, they're claiming, according to them, they're already selling all of these products and all. Then under geographical segment, we have geographical presence. 79% of revenues came from Gujarat, so heavy concentration in Gujarat. 6% came from Maharashtra, we got Delhi, we got Karnataka, and 1.1% came from international UAE region. And they got one experience center in Gujarat. I guess it's the Gujarat. So even in international, they have got a presence. And information from the con call, the company is expecting 50%, 40 to 50% revenue growth in fiscal year 27. They also acquired a company named RSVP Infotech for 98 lakhs, a new acquisition from which they're already expecting 15 to 20 crores. Okay, 15 to 20 crores. Then they have 20 to 25% EBITDA margin coming in the robotics hardware segment and 30% EBITDA margin, around 30% coming in the software and annual maintenance contract segment. So, yes, pretty profitable. Okay, so the software one is pretty profitable. 20-25% in robotics hardware. Then fiscal year 26, 37% revenue came from robotics and AI, and they're targeting to increase this to 60-65% share in the near future. And finally, they're expecting their UAE subsidiary to generate 30 crores of revenue in fiscal year 27. I'm thinking this is from the UAE segment. So only 1.1% of revenues came from that in fiscal year 26. Maybe it can come from more. So Nanta Tech, let us see how the company does in the future.